All right. Hey there. Good. Almost good afternoon. It's good morning, right? Chris Franks, Texas West Capital, coming at you guys live from just north of Houston, Texas on Lake Conroe. Always good to have you guys joining in today. We're going to talk about, we're going to talk about war. What's it good for, right? Hopefully reading that title of the show today got you singing the song. We're going to talk about the broken window fallacy. We're going to take a look at CPI and what it means and why the heck are stocks still going, right? As well as I've got quite a few charts here, but I don't have a lot of time today. So I'm going to see how many of them stuff going. And of course, guys, as always, follow me wherever you're at, wherever you see me at, whether it's Twitter or Facebook or, wherever else, just follow along, subscribe to the channel, leave a comment. I'm not here to force you guys to believe what I have to, to think, believe what I think, right? I'm here to give you a rationalized explanation of why I believe the things I do, and also let you know that, hey, that's liable to change at any time if new information is coming in. That's what it means to be a trader, right? Because there are no guarantees in trading other than the fact that you will lose money from time to time. So other than that, there are no guarantees. So risk management, absolutely the most important thing you're going to do day in and day out as a trader. If you're talking to anybody else and they're saying anything else, run the other way. That isn't saying, listen, you have to come with us. We'd love to have you with us. You can see right here, on the little banner thing going across the bottom of the screen there, you can join us. $11 and some change a month get you access to the Bitcoin charts, the S&P E-minis charts, and the Euro USD charts. So whether you're trading Forex, stocks, or, crypto, you've got your three main sources there. And just to kind of see, okay, is this guy for real? Is he legit about what he's talking about, what he's doing? And then you've got options to upgrade to different things in there if you like. But even if you don't do that, if somebody is telling you that risk management is not the most important thing, if they're telling you stop losses don't work, I'm talking to you, Caroline. Anyway, just run the other way, guys. You don't get in here. You don't do this for 10, 20, 30, 50 years and ignore risk management, okay? It is a game of losing, right? That's what we're playing here. We come in generally with the idea that as a trader, we're looking to make as much money as possible. But at the end of the day, the game is really about minimizing your losses. Okay. You're going to get those trades that do great and you make a lot of money on it. But I swear to God, if you do not have proper risk management, it doesn't matter, because all those other times where you're going to miss, you're going to be taking out everything that you won and more. Okay. So I see I got some guys in here from Texas West Capital, some of our members in here. They will tell you the same thing, guys. I don't know how else to say it, guys. People come to us and they stick with us for years usually. If you think that, we're talking a bunch of BS or whatever, you don't do that. You don't sit there and keep paying every month for years if you're not getting something from that, right? Especially not with what we charge sometimes, right? Depending on what kind of level you get here. But anyway, just kind of getting your guys' head straight, hopefully, because it's a Friday. It's Friday the 13th. I see Navlusians here. I see Data's here. Sets, McGee, Frank. What's going on, guys? Anybody here superstitious? Friday the 13th, supposed to be a bunch of bad luck. Are any of y'all superstitious? I got to be honest with you. I am not. I learned at a young age, I guess you could say, that that really we kind of, we control what goes on in our lives, right, to the greatest extent. So if you believe that, it's hard to really kind of buy into the whole superstitious thing, like, oh my gosh, it's Friday 13th, so bad things are going to happen, right? Bad things happen, good things happen. It's all part of life. But if you're focusing always on that bad stuff, it's really difficult to get anywhere else. And that includes trading, relationships, business, job, whatever it is. How you are in one point of your life is how you will be in the other points of your life, right? So if you've come in as a trader and you hear me talking to you about how important your mindset is and how important it is to understand that you have control over your life, that you're not a victim, right? If you listen to all that and you go, man, yeah, that's great. That's great. It makes sense, right? It's not going to be any different in the other part of your life. If you accept that as a trader, it will naturally go across the rest of your life and you're going to have a much better life. I promise you. A lot more fulfilling, a lot more enjoyable. All right. So just some stuff to be said there. Who am I talking to? I'm talking to you, Mastodon. That's who I'm talking to. You especially, because you asked. Anyway, so yeah, anybody's listening, guys. If you're listening, it's what it is. Every once in a while, we get people on the show or whatever. It's just like anywhere else online. People are going to troll, and I'm not saying that Mastodon is. I would just say in general they're going to, and they're going to talk crap about somebody, right? But the reality is, if you've been following me for any length of time, I've been doing this for years here. Everything's out there. It always is. Even with the charts that we post, at Texas West Capital, they're always there. They're not removed. And so, there is a history. There is a consistency there. So, real quick here, guys, CPI came out just slightly higher this past week, right? Earlier this week. I think they were looking like 3.6 year over year is what they were looking for. It was 3.7 last time. But we got 3.7. So we just stayed with where we were last month, which, it didn't come down a little bit like they were expecting. Month over month, it was month over month was a bigger move here. Month over month, we were 0.6 last month, the last time. We were looking for 0.3 this time. We got 0.4. So again, surprise to the upside, but still less month over month than what we were the previous month, right? So that's good. Again, year over year, right where we were previous month. So, if you wonder why the heck our stock's still rallying, because one, the Fed's preferred inflation gauge is the PCE, guys, and that comes out at the end of the month. They changed this 15, 20 years ago. Up until that point, they were using CPI. Today, media still sits on CPI. Most retail traders still think it's important. It's not really, not to the Fed. The Fed looks at the PCE because of the way in which it takes that information and kind of shows changes, not just are they buying or not buying, but are they switching from us? Are we, going from name brand to generic products, right? Stuff like that. It gives them a better idea of what is actually going on. So I would not get too hyped up about CPI. Definitely look at PCE, and PCE was good last month. So we'll see if we can kind of get that to stay even or, drop a little bit more this month. But that's not for another couple of weeks, guys, all right? Navusian, what's going on, Spiral Architect? I see you there, bud. Navusian's asking, Chris, do you believe the TLT will be bottoming on the macro level soon? I believe it may be. I've actually got a TLT chart I'm going to bring up here, guys, as well as the 10-year yields and some other stuff here as well. So we can kind of get a more macro kind of look at things that are going on. But the one thing I want you guys to pay attention to is how insane everybody's getting, right? Everybody's getting to that craziness level where, oh my God, it's never going to end. Oh my God, it's going to keep forever, And so once you've been through a few market cycles, if you're paying attention, you start noticing these things. And so with Bitcoin at the first top of the last cycle, right? It was the laser eyes. And I pointed that out here on this channel. And I said, listen, this is, in April of last year, I said, listen, this doesn't have to be the top, but it is a top. And then, it dropped to where we were looking for it to pull back to. But, again, you kind of start getting, if you're paying attention and going through market cycles, you start understanding what it really means when people are saying, oh, everybody is bearish or bullish. If you're new to trading, often you'll point to your Twitter or X, whatever you call it now, feed, and you'll go, oh, look, everybody's bullish or bearish, or your social media account. But again, guys, remember you're fed what the algorithm thinks that you want to see based on the things you type and the things you look at and the things you consume and how long you consume it, the information and whatnot. So you're not actually getting fed this unadulterated timeline, right? So don't ever use my timeline, my feed is everybody's bullish or bearish. So that means it's going to do one thing or the other, because that's just going to mess you up. But once you start listening to it, again, you see everybody here, talking about how yields are just going to continue going up and how bonds are going to continue going down and how the dollar is going to continue going up and all these things. And usually when you're getting to that extreme type of overall market sentiment, usually it indicates that you're getting to a reversal point. So yeah, I'm going to show you that chart here in just a bit. Sats McGee says SEC GBTC appeal deadline is today. Yeah, I posted that there on X. We might get some Bitcoin volatility today. Yeah, so the idea generally is, so we know that GBTC won the court case against the SEC. The SEC has a certain amount of time to appeal that. That time to appeal that is today. So if the SEC does not appeal that today, then it stands, right? Does this automatically mean that GBTC gets converted to an ETF? No. The SEC could still come up with some other arbitrary reason or some other reason why they can't. But what it is if they're not going to appeal this, what it's likely to do for market participants is go, oh my God, at least to get a knee-jerk reaction, and potentially some buying of Bitcoin, some price rallying, at least locally. So we'll look at the more macro Bitcoin chart here as well in a bit and talk about that there. But yeah, that is today. So lots of stuff going on this week, guys. And it's funny that that's actually happening today on Friday the 13th, right? When everybody's all superstitious and whatnot. So it is what it is. But CPI is where it is. Again, I'm looking at PCE coming later this month. But really, at the end of the day, you guys, I don't trade based on news events. I trade on the chart, right? I talk to you about the news events. I talk to you about the government numbers, the economic numbers, these kind of things, because you want to hear that. But I always try and, I'll give you that information, but then I'm going to try and bring you into my herd, right? I'm going to try to get you to understand that all that is reaction, all that is data based off the social mood. The social mood is showing up in the charts first, right? So if everybody's feeling kind of happy and not feeling too worried or whatever, they're going to buy. If people are feeling concerned, if people are feeling pessimistic, they're feeling down, people are going to sell and or at least take, not buy anymore, in the markets, right? So it's not that the markets magically go up and then people get bullish, right? It's okay. People in general. Now, I'm not going to say some people, don't trade based on that. But what I'm saying is the reason price goes up is because people are buying, and people buy because they believe that it's okay to do so. They're not overly concerned about the risk. You see what I'm saying? And when they don't feel so good about things that are going on in the world, or, at least locally, what's going on there, then they're going to stop buying, right? And that shows up in government numbers, purchases and, again, PCE, stuff like that. Jobs, businesses stop hiring, they slow down production, all these kind of things. And so all that is seen in the charts. And then news events happen. And then people go, oh, look, this news event happened, so this price thing happened. And it's rarely coincided, because usually that movement is already in there, right? Usually the larger trend is already in. Again, you could think about when we were attacked on a 9/11 20 odd years ago, right? Here in the US. And you should have expected the stock market to tank. Basically, the stock market had already been coming down off the dot-com bubble bust, right? And so it was almost at the bottom by the time that happened. And then back up, right? It actually had a knee-jerk reaction up, came down a little bit lower, and then rallied back up. So you can look at the Dow Jones looking back at that time in 2001 there, and you'll see that. But these things we just kind of tend to believe things because people say them all the time around us, and we don't verify. Guys, I'm telling you, in life, stop taking something that somebody said as gospel truth. Even what I'm saying, I'm telling you right now, go look it up. You'll see, right? But you have to start questioning the nonsense that everybody takes as a given that isn't actually a given. Because as long as you keep doing that, you're going to keep getting in what everybody else is getting, and nobody's ever happy with what they're getting, right? Vincent, what's up, man? Good to see that you made it. So real quick here. So we're talking about war, right? And I've been on a few things this week. I was on Crypto Town Hall on Monday, I believe it was. And then, of course, talked about some charts there with Scott on Wednesday. I recorded an interview there with BitLab, and I think that's going to be out tomorrow. So I'll be sharing that across social media whenever I get that link. But, all of it kind of talking about charts and social mood and war. And so people think, okay, there's this war going on over there in what's it called? Israel, right? Israel, Hamas, the whole thing over there. And they're like, oh yeah, war's good for the economy. War's good for the economy. This is a common misconception that we get, right? And so one of the best ways to understand why this is not, necessarily true, right? It isn't good that, it isn't, like people would say, okay, well, the U.S. came out of the Great Depression, when got better because of the war, right? we had, what was that, World War II there, and that all that spending caused us to come out, right? But in reality, the spending could have been done somewhere else, right? So the broken window fallacy, right? It's this, it's part of this essay that was written by Frederick Bastiat. And the essay itself is called, in case you want to go look it up, it's great. It's a great read. It really is. That which is seen and that which is not seen. It was written in 1850, guys. Okay. And so what the fallacy, this broken window fallacy, illustrates this common misunderstanding regarding the benefits and costs that are associated with destruction, right? And so that's why people often, when people talk about war, how it's good for the economy, a lot of times people in the know, they'll bring up the broken window fallacy because it says not really. So here's how it goes. So this is a parable here, and in this boy breaks a window, and the bystanders all around there suggest that that incident there, while it's unfortunate, will actually stimulate the economic activity because the shopkeeper now has to pay a glazier to repair the window. Okay, and so it sounds legit, right? It sounds like, okay, well, so he's got to go spend money to the glazier to create the window. So now there's this money movement going on. The money starts circulating, your jobs are supported, right? But Bastiat then argues that the line of thinking is actually fallacious. And he says that because the fallacy itself overlooks the opportunity cost of the shopkeeper's spending. And if you're into, economics at all, you know all about, or you should anyway, opportunity cost, right? So he goes on to say, okay, well, if the window hadn't been broken, then the shopkeeper could have actually spent his money on something else, like a new pair of shoes. And if he had spent on the new pair of shoes, that would have provided income for the shoemaker, right? Instead of the glazier. But that unseen scenario then represents that lost opportunity for economic growth in other sectors. So it's just basically money moving around, right? So if you apply it to war, you can kind of use this similar reasoning, right? So wars can stimulate economic activity through increased government spending on the military and defense industries, right? The military industrial complex. But the broken window fallacy is going to suggest that all those resources and labor and capital that's been expended on war could have been used elsewhere in a much more productive, and beneficial way. So instead of just replacing what had been broken, what had been destroyed, it could have actually gone into creating greater prosperity, right? So all that destruction that's wrought by war, much like the broken window then, necessitates spending that could have been allocated toward other, again, potentially more productive investments like infrastructure, education, healthcare. So the real cost of war then includes not only the visible destruction and all those expenditures related to that, but also the unseen opportunities that are not able to be pursued, right? And those those unseen opportunities then could have led to longer term economic growth and improved living standards, right? So, the broken window fallacy itself, it underscores the importance then of considering opportunity cost when you're talking about economics and policy making. And it cautions against, that superficial appeal of destructive, stimulus, right? And advocating for a broader perspective on economic cost and benefits. And so that's what most people don't get. What's going on, Fibbo? You see what I'm saying here, guys? So people come in and they talk about war and they say, okay, well, war, the benefit of war is that it helps an economy, right? It gets spending in the economy. But the reality is it's spending to recreate those things which already were there. It's a sunk cost, right? I mean, it's you could have used that money to increase the standards of living, to increase the prosperity of the people. But instead, you have to use it just to replace what was destroyed. You see? So it's not that it stimulates it. It just moves the money from where it could have been potentially much more beneficial for everybody. It moves it to something which is just, again, just replacing what was already there. So Brian says the money could have been spent on BitConnect and Dentacoin. Well, my gosh, man. I have not heard those two things since last cycle. Well, 2 cycles ago, right? Oh, man. But yeah, guys, so I want you to think about that. When you're thinking macro, when you're thinking big picture, don't just go, oh, this is the simple answer here. It sounds like it makes sense. It always sounds like it makes sense. Doesn't mean it does, okay? So there we go with that. We've got CPI out of the way. We've got broken war fallacy, or the broken window fallacy and war out of the way. And let me bring up another chart here real quick. I've got some charts again. Fibbo coming here talking about how great gold is doing and just getting me to get over here and bring in my gold chart now. So we're going to look at that in silver as well. Okay, guys? Satoshi Ray Bitcoin, what's up, buddy? I still love that, man. You know, I'm from Texas. Stevie Ray Vaughan. I know where you're going with that, man. So I love it. It says military contractors prefer war over constructive investments. Yeah, it's their bread and butter, right? It's where you can get government to spend. If you're a defense contractor, holy crap, especially here in the U.S., you can get government to spend. It's a lucrative sector to be in, right? All right. So let's jump over here. Since Fibbo is talking about gold, kicking the proverbial ass, we've got two charts here. I've got silver on the left here, and then gold on the right. And so since Fibbo, again, is talking about gold, we're going to pop this over here to gold. Look at how clean that is, guys. Look how beautiful that is. Look at that. Look at that. Again, we talk about extremes, right? Everybody's talking about, oh, gold is going to break down. It's going to 1,700, right? Most recently here, they were talking about right around in this area, right? What's going to happen since? This is following, what I was looking for it to do, my count, right? We got a little bit of breakdown through the 50%, right into this wave 4 area, which we expect, right sideways here. I mean, you really shouldn't be surprised here, guys. Check this out. Always look left, all right? Always look left. Look at this. Look at where it's going. Look at this. So wave 4 caught it there. Wave 2, this wave 4 of 1, wave 4 to lesser degree. Wave 2 pulls back exactly where you expected. Boom, it comes up, and then pop. We start jumping through some fair value gaps here now on the daily, right? That weekly is going to close today. Look at that weekly, guys. Look at that. Fair value gap closed here on the weekly. So we had the big move down, the capitulation volume coming in. We dropped a little bit lower here to this. It's not a hammer. The body's a little bit too big, but you're getting that long lower wick there. Almost the same amount of volume, much less results. So similar effort as the previous candle here, much less result. You had this big move down. You had very little move down here for the close, right? And then you get moved back up here, fills in this weekly fair value gap. My God, guys, what more do you want, right? What more do you want? We were on this as it happened. Again, this was the count looking at it. If you weren't getting into that, I don't know what to tell you guys, okay? But so it's set up there. So it works well. It's popped up. Looking for a breakout above wave B here at 19.6890. And if we can get that again, I see this as a 1-2 heading up. And so let me go ahead and put the wave 3 on here. I've just got it thrown up there, but let me show you where we're looking for wave 3. By the way, that red line just above where I'm at here is the all-time high. That's around $2,089 and some change. Okay. Wave 3, minimum expected target up here at $27.50. So that'd be new all-time high here. When we did these 3 here, I posted on Twitter about how, triple tops don't generally play out like you think, because usually what it is a pullback before a breakout, right? It's just like this continued push into it and then pulls back and breaks out. And that's what we're looking for it to do. $27.50 is where I have wave 3 headed to. That's quite a significant move up, right? That's quite a significant move up because it's wave 3. Right here, I've got this as the larger 3 and 4. So A, B, C here. So wave 3, wave 4, and then again 1, 2 here, pulls back just beyond 50%. Right here in that low volume node, right prior to the high volume node, takes off like a banshee, fills in that weekly fair value gap, hits the high volume node here. So breaking out above wave B triangle resistance there should get us going up there toward 27.50. Are you long gold, folks? Are you long gold? Similarly, here we are with silver. It is also doing, the same kind of thing here. We've got weekly. We had a much longer wick here on the bottom on the weekly, almost hit the 61.8 retracement. We're right up through that. We've almost filled in that fair value gap here. It's right there around $23.06. We got up to $22.94.5. So yeah, basically filled in that weekly fair value gap as well. Looking for a breakout above wave X triangle resistance here at $24.05. If we can break out above that, that has big implications. So with gold, you're looking at this horizontal resistance, right? With silver, we're looking at this diagonal resistance off this 2011 swing high. Remember, gold had the same, was swing high up here in 2011 as well. And it on this move up here, right? What was this? August of 2020, it made a new all-time high. Let me see here. Above that 2011 swing high, right? Silver, if you've been paying attention, has not done that, right? So silver's been lagging majorly. Boom, there we go, right? Big move down here, and we're just kind of doing some sideways here. So we're looking at the break through these kind of descending resistances here, and in doing so, I've got us as a 1-2 here. And so this wave 1 up here, wave 2 down here. Breaking out above that wave X triangle resistance there should get us a minimum expected wave 3 target. This interior wave 3 target up here at $40.99, which gets us a wave 5 up here at $48.05 on here. So 1, 2, and then 1, 2, 3. Up here, 3, 4, 5, right? So that's kind of where I'm looking at, guys, here. And as you can see, that gets us just shy of the all-time high there. So silver may turn out to be the better of the two to buy as this goes on, right? Because it would make a substantially more important move up, bigger move up than what we would get here with gold. A bit anyway. But I don't think you lose either way with those, right? So I think the silver and gold are looking good. Let me see here. We could jump over here to the dollar again. You guys might remember this chart I've shown you before. This is my big macro count chart here. And I said right now it looks like we got a 1 with a flat with a 2. I had a target up here of 107.165. We hit 107. It's right up here at the high. We hit 107.05. And we're getting rejected there, and that's at ascending channel EQ as well. So my expectations were probably done with our 5 waves up here, looking to come on back down. And if so, and if we're breaking down below wave B here at 99.22, that should get us down here towards 75.33 down here. Ultimately gives us 5 waves down to finish wave C here at 70 or so. Interesting how that works, right? So I think, if you have to absolutely have a narrative, right? Again, I'm not big on narratives. You can usually figure out the narrative from the chart. But if we're looking for gold to break out higher, we're looking for dollar to drop down lower. We're looking, and we'll look here just a minute at some other, yields and TLT and whatnot. We're looking for those reversals as well. Guess what? It probably means the government's going to be starting to print some money, right? More likely than not. They've been very restrictive for a long time now. Over a year, 2 years, something like that, right? We've had the largest drop in M2 money supply, at least since 1950. I don't remember if it was forever, but at least since 1950, right? because the government keeps selling off all its, what you call them? It's treasuries and its MBSs. We had the other thing. Remember in June when we had the scare about the debt ceiling, about the debt ceiling coming in, right? And the government shutdown. And they came in and they, made some agreements to kick the can down the road a bit. And remember, the big thing everybody was talking about was, oh my God, well, the government is sent to, issue all these treasuries, and that's not good. Oh my God, all this bad stuff's going to happen, right? And I said, well, no, what's going to happen is all that reverse repo money, right, is going to start flowing into treasuries. Treasuries is still considered pristine capital, pristine, right? And guess what's happened, guys? Yeah. The money's moving from since that time, since, whatever it is, beginning of June there, middle of June, from those reverse repo facilities to the treasuries, right? Now treasuries right now, long-term, because we're at this height of this move, right? Not getting bid. They're not doing so well, right? You're talking about the long-term one, but if things are about to flip as it looks, well, guess what? It'll all start kicking in, right? So let's kind of, again, this is what we're looking at with the dollar here. So we're looking for that rejection here and come on back down. There is the possibility that maybe this is like wave 5 here, actually end up here at 125.705. If we were to start getting way up here around 112 or so, I'd really consider that the possibility. But if we're getting rejected here as expected and continue to drop on down here, especially if we drop down below wave B, I mean, I'm looking down there toward that 75 area for that third wave. Let's see here. So jumping on to Bitcoin here real quick, and then we'll kind of get to the other charts. Again, nothing's really changed. This is still my, my big picture. I've posted this multiple times on my feed there on X. We got the impulsive breakout above the descending channel resistance. That led in the next candle to a breakout above the last lower high here. This was bearish market structure here. We broke out above it. That breaks that bearish market structure. So right now we're in bullish market structure off the swing low. We got a high, we got a low, we got a higher high, potentially a higher low. We really want to see that breakout higher that'll really kind of confirm that. Right now we're finding support at the daily pivot, which is, what you expect, what you're looking for. Stochh RSI has almost bottomed out and oversold on the daily. Let's see here. It looks like we may possibly have some bullish divergence on here. It looks like we got flat swing lows here on RSI. And we would have then higher lows here on price. So again, the idea being that, if we can rally and break out through this swing high here at 28,592 on this Bitstamp chart, we should rally right into the resistance up here, and doing that should break us out higher. If we break out higher above the swing high here at around 31,818 or so, that should give us a pretty quick and easy move up to 38, 42,000 easily. And it doesn't mean one candle, but it's a pretty easy move up to there. And that just continues, the move on toward the low 50s there. So, yeah. Mastodon, thank you, sir. I appreciate it. You said very nice charts. Well done. Yeah, this is just, it's easy to get caught up on the low time frames, guys. But ultimately, right now, we are going sideways for about 7 months now, guys. You can make money on the lower time frames. We do, again, we teach price action, LA Wave, and Wyckoff, and every week, we have classes. And I think it was last week or so in the price action class, I was showing, our students how they could have made just like stupid money on the local trading. But, it requires a different mindset, right? You can't be trading the 5-minute chart looking for a weekly target, right? And that's where most people end up having a little issue with their trading, right? They get into the short time frame, but they're still thinking long term. So just something to kind of keep in mind there, guys. But ultimately, again, just 7 months here sideways, guys. This has been crazy. I did not expect this much sideways. I expected this first drop and then the breakout. And then we didn't. We had this double bottom kind of thing going in here. We got this reaccumulation range building. So we'll see now. We'll see if we can get this followed through. Worst case scenario, guys, is we do break down below the swing low here, and that's still possible. And then we got targets here of 23,394, 22,446, and 21,624. My initial thought is we would probably just hit the first target. And what I would be looking for is just a spring below here and a move back up. That's what I would be looking for here. This still becomes, it's still reaccumulation. We get the spring down below the breakdown below the range support here, and then right back up into the range there, and then we would have a nice move, pretty significant move, kind of maybe even similar to this, maybe not quite this strong, but the same idea coming off that to rally back up. So we'll see if we get that, but either way, guys. Overall structure is bullish. The overall structure is accumulation and now reaccumulation. It is not this structure, from back here in June, this June swing low. This structure is not bearish. Okay. There's nothing in the price action and volume that suggests this is some sort of redistribution looking to go lower. Okay. So, the idea that we're going to drop down to 16,000 or lower right now, it's so far out there. I'm not saying it can't happen. Absolutely anything can happen anytime, right? Again, the only guarantees in trading is that you're going to lose money from time to time. But there is so much that has to happen prior to us getting anywhere near those levels, down at the swing lows down here. So much has to happen through these areas that if you're just automatically saying, oh, it has to go on from here down now, one of two things is going on. One, you're very emotional, and you're not being honest, logically honest about what's going on with the chart there. Or two, you're just trying to get people to follow you. You're just trying to create some controversy to get people to follow you because eyeballs are money in the world of influencing, right? Which is why I continue to sit around 31,000 followers on X, because I don't blow smoke up your rear end, guys. I don't tell you what you want to hear. I tell you what you need to hear. I don't just post to get you to follow me. If you find what I do interesting or compelling, or even if you don't believe it, just something to make you think and make you, test your own thoughts and your own biases and your own ideas, man, great. Follow me. I'd love for that. I don't hate people because they think differently than me, right? I have a big issue with people who are just jerks. Why you got to waste your life being such a jerk? I don't get it. Life's too short, man. Once you figure that out, you stop doing that and you start focusing on yourself. And once you start doing better, you start being uplifting and helping people. You don't act like most of social media, right? But people want attention. It's a really crazy thing. But again, I posed this question before though. So everybody's talking about this great reset and all this stuff. What if it doesn't happen till, I don't know, what is it? 2023 right now? What if it doesn't happen until 2030? What if we get a repeat of the roaring 20s of 1920s into the Great Depression? What if that's what we're doing right now? Are you prepared for that? I'm not saying that's what is going to happen or what has to happen, but the fact that people have been, arguing about the bottom of Bitcoin and the bottom of stocks for almost a year, for a year now, in spite of these things rallying, of Bitcoin rallying 100% and stocks rallying whatever, with the stock index rallying whatever 30% or 25% or whatever, it really begets the question: what the hell are you doing? Why do you continue? And this is, I'm not saying this to be mean, but you got to ask yourself, why am I continuing to double down on this thing that I've been arguing about for a year now? I mean, if it eventually were to happen, you don't get any kudos. You don't get any pats on the back, because you've been wrong up until that point. And so people are going to go, well, you know what? Sure, it was bound to happen at some point, but you missed all that money you could have made on the way up, arguing about it the whole time. And so, again, I always say, if you're a trader, guys, do you want to be successful? Do you want to be right? or do you want to be profitable, right? Do you want to be right or do you want to be profitable? Profitable is successful. And all that means is have a strong opinion, as Peter Brandt would say, have a strong opinion, but keep it loosely held. So if new information is coming into the market, into the charts that says, listen, what you think is happening is likely not going to happen, you need to be able to pivot. You need to be able to turn. And stop worrying about what some idiot online says. Oh, yeah, you were bullish all the time and now you're bearish. Yeah, I'm trying to make money. What about you? Now, if you are flipping every day or every week, the odds are you don't know enough about what you're doing yet, right? But if you've been bullish for a while, whatever, right, and you're still bullish, and then new information coming in that says, oh, maybe I need to be bearish now, and you're not considering that, like really, what the hell are you doing? You're just trying to lose money. Stop worrying about the other idiots online. They'll be there long after you're gone. They'll still be there acting the same way, guys. Okay. I hope that hits home and you guys are like, yeah, screw them. I don't need to worry about that. I need to worry about what I need to do to make money. Let me see here. What other charts I got? We looked at silver, gold. We looked at Bitcoin. We looked at the dollar. Let's see here. Ethereum, Bitcoin. I've been getting a lot of questions about this. I've shown this a few times in the past. Nothing's changed. We've just got, again, we were looking at this potential 61.8 and then the 70.5 and then the 78.6 is our targets. We're at the 70.5 right now. I could see us potentially falling on down, get a little rally here and then a fall back down toward the 78.6. That's right around 0.055284 or so. Bottom of the range here. Ultimately, look at this volume dropping off, guys. I love how the volume drop. Look at how this volume drops off the entire way. What does this tell you? That means right in this area, see this volume is so low, there's barely any selling going on. Markets isn't trying to, push it down. So what does this mean? Well, it means if we can get this reversal here, this is, the kind of the canary in the coal mine that says, hey, listen, alts may be ready to start rallying. So, again, here we are, we're getting down here and, it looks like a pretty clear, 5 waves up here and then an A and then A, B, C, D, E is a triangle for B. And then, A, B, C is 1, 2, A, B, C is 3, 4, A, B, C would be 5 as an ending diagonal here. I mean, that's what I'm looking at here, guys. Now, this is the weekly chart, so this doesn't have to happen overnight or anything. If we jump to the daily chart here, here we are with the daily chart. So again, could be bottomed out. What I would want to see on the daily charts, I want to see an impulsive breakout above this daily pivot right around 0.061796. If we can get an impulsive breakout above that, then that'll hint that maybe wave 2 is complete here. But ultimately, what we would then need is a breakout above wave 4 here at 0.06467868. That'll signal that the bottom is likely in. And then we need a breakout above wave B triangle resistance here at 0.07362524 to signal, okay, to add confidence to the count, say, okay, wave 3 is probably in progress up there toward a 0.13582 area. That's where I've got that target right now. But those are kind of steps we need to get there, guys. That's how I would look at it. If you're thinking maybe you might want to long it, or you're looking at, okay, what's going on with maybe alts, that's what I would look at there. U.S. 10-year yields here. Let me see. What is the swing high? This is 4.887, 4.884. Okay, so it's right here then. And so as you can see here, it looks like I think we're probably going to pop up a little bit higher here. I can see us breaking out here and rallying up to around 4.971, just about 5% on the US 10-year yield. But I think we are probably just about, if not at the top here. Now I've got this for right now as a 5-wave rally off this swing low down here in March of 20. March 9th of 20, that week. I'm also looking at the idea this could be an ABC as well, but nonetheless, 5 here. And we should at least, if we can get a rejection in this area, we should at least be looking for a move down here toward about 3.25 on those yields. So again, yields go down, bonds go up, right? We're at the point here where everybody says yields are never going to stop rising, bonds are never going to stop dropping, right? That's what I was talking about at the beginning of the show, that craziness, right? And so, I think we're probably just about topped out there. And that would kind of align here with TLT, right? So TLT, we've got this here, right? Now I've got this as potentially 5 waves up here as a leading diagonal, from all the way back around, 04 or whatever that is. And you can see we've pulled back pretty close down here to the those lows, right? Not quite at it, but we pulled back pretty close. So things are kind of interesting here, but I can get an A, B, and then a 1, 2, 3, 4, 5. I'm sorry, a 1, 2, and then a 1, 2, 3, 4, 5 gives us 3. 4 is a triangle, and this has been sideways here since October of last year, right? And we finally broke down below that. You can see that on the weekly for that year there, we've got bullish divergence in oversold, bullish RSI divergence for a year. If we look at the weekly candles here, you can see that we gapped up. We're trying to rally up here. We had a bit of capitulation in the volume. Look at these last 2 weeks right here. Look at how the volume was way down low. And then you had this one. It got caught up, bid up right there, right? Big volume spike. And then more here, another big volume spike. And look what's happening this week. Volume remaining up here, and it's turned around where demand's in control. So I think there's a good chance that it could be bottomed, if not very close to it. So what am I looking for? Looking for an impulsive breakout above, again, the daily pivot here, right around 90.5. If we can get that, that's going to hint that we may be done here. But we really need a breakout above the wave 4 triangle resistance at 103.95 cents to signal, okay, it probably is in. And then we'll be looking for that to rally higher there. But, again, TLT potentially bottomed here. Yields on the 10-year potentially topped or very near slow on both of them, We've got the dollar potentially topped or very near on this, this rally we've had. Bitcoin just going sideways, right? What else do we got here? Oh, we got SPY, right? Nothing changing here. Hit my target right around the 50%. As you can see here, nice hammer type candle here, bullish engulfing. Last week, this week, getting a rally up. We need to get up here around 451 and 451.08 to kind of fill in this fair value gap on the weekly. But reset down into Stochastic RSI, reset bottom down there and oversold. It's crossing bullishly now, trying to get up. We break out above wave B here at 453.67. That should then give us a minimum expected wave 5 of 3 target up there. Make sure I've still got that correct. Yeah, right around 482.50. And then you would get a 4 on the pullback down here toward kind of where we are. And then we get a 5 on the move up there. So again, stocks as well looking to be bottomed and rallying up on that fifth of a third wave. You get basically the same count when you're looking at the other indexes. You look at the S&P, you look at the NASDAQ, stuff like that. You're still getting basically the same kind of count there. A wave 5 of 3 in progress, wave 4 of 3 being complete, 3 waves. What else do I have for you guys here? I've got, oh man, this chart. So on Scott's show earlier this week, let's just do this one here. I was talking about some stocks that looked like they were good, probably bottomed and looking to head up higher, right? And we were looking at this range right here. I said either it breaks out here and then breaks out impulsively above that daily pivot to signal then the next move up here and the next move up, right? Or it was going to break down below the range, tag the S1, and head up, right? So we'd had this bullish divergence kind of showing up here over and over again, basically from June till till just recently here, October 9th, right? And so you can't see it here. But what actually happened is, I'll zoom in a bit here for you. Dollar General gapped up here from this morning. Big gap up. Look at that. Boom. So we've got the gap up out of the range now. Expansion of volume, spike of volume there. We want to see some follow through and, impulsive breakout above the daily pivot there. Let's zoom in a little bit here. Look what happened on the 4-hour. Look at this. Doji at the bottom here, dips right below the range, and then huge spike of volume in that 4-hour to carry us up through here. So a great move up. Like I said, I need to see an impulsive breakout above the daily pivot. Doing so gives me a target up here of this gap fill, potentially up here around 154.5. Breaking out above that kind of local resistance there gives us then another gap fill up here at around $200.50 on that Dollar General chart. Obviously the weekly looks amazing. Look at that weekly. Large outside bar, bullish engulfing candle, special volume. Weekly RSI and Stochk RSI are threatening to break out bullishly. Stochk RSI has crossed bullishly. RSI is about to. It's nearing that cross there. So yeah, we want to see if we can get that up. We had this rounding coming over here with these large candles into the smaller candles. Volume dropping off. Looking for that rally there. Again, I think it was something I talked about recently here with our price action class. But yeah, so man, it's not looking bad, right? It's not looking bad at all for Dollar General there. So I would be looking for an entry. Yeah, let me see here. What else do I have? I have talked about ENJ USDT before, looking for it to bottom somewhere right around here. I've got this blue grayish range here between the 61.8 and the 65. You can see we actually have a little bit of a low volume node right there around 19.5 cents. So you may still get that there, but really looking for this thing probably closer than not to breaking out. I would be interested in buying in a breakout of this descending resistance here. I'd be interested in buying that. You can see on the daily here. What we got on the daily? See, we could come there a little bit further down to the S1. I want to see a breakout above that pivot. Let me get that descending resistance on this one as well. Okay, there we go. We'll clean it up a bit here. There we go. But yeah, so I'm thinking probably a drop down to the S1 pivot here. I would, if we get that, I would be looking for a reason to long here or reversal. It's larger time frame. That is likely to get daily RSI back down and oversold. You can see that Stochk RSI already is. And I'd be looking to, long that. And so you can choose to long that there, but really what you need to see is the breakout, impulsive breakout above this descending resistance and the daily pivot here right around 24 cents, 24.2 cents, that area. If we can get impulsive breakout above that, we should be good to go. As in wave 2 is complete here. And I would be looking for minimally, a target up here toward this resistance at around $3.87. So, it would be a big move to get us up out of there. Let me see here. Whoops. Let me just use this tool here. That would get us about 1,850%, about 1,850. So 18.5 times your money, if that works out like that. So yeah, I think we're doing good there. I think we do that. breaking out above wave B here at 56.8 cents. Should then add confidence to the count and again suggest that we're going to probably even break out higher here overall. But minimally right now we can just go, okay, well, if you want to go from there, you can set a target here at the weekly pivot at about $1.13, $1.14. Impulsive breakout above that. You can look at the R1 pivot area right around $2.07.5. And at that point, depending on how this rallies up here, well, I think by that point it would be the next year and these pivots are going to change a bit. But you might get a pullback down toward the pivot and then a rally and breakout above the R1, the swing high at the R1 area takes you up higher. So sounding good, guys? You liking these so far? Yeah. I mean, it's looking pretty decent, right? Meta, man. Look at Meta, guys. So Meta was that stock over here in October of last year. Man, I had so many of these. I kept telling everybody, don't take it for granted. Everybody's overly pessimistic, the end of the world kind of thing. Don't sleep on these. A prior rally, right? And so, some of them I did was, GBTC, Carvana, Meta here. And look at what Meta's done since then, guys. I mean, this was it. This was when everybody's laughing at Zuckerberg and calling him a cuck and all this other stuff. And man, we've almost hit that all-time high, right? I think, we'll get a target up here of around 372, I think, to finish out, and I've got a wave one, just 5 waves up, which would suggest on a wave 2 pullback and a 3 on the breakout, right? So, again, this is what people argue. I mean, I hope you guys are paying attention. This is what I want you to, if anything, I want you guys to pay attention and go, man, I can't be out there being the person out there screaming in the face of price doing something, saying, oh, it has to do something else just because I think it has to. Price is going to do whatever it's going to do, right? Off the lows, guys, we're talking about a rally right now of this weekly high of 274%. You could have made 2.74 times your money in the last year now, in just under a year from last time. And all you had to do was buy once and hold to where we're at now. Onyx, what's up, bud? Good to see you checking in. So, and there's just countless charts like this, guys. Again, Bitcoin was another one, right? Everybody's like, oh, it's going down, whatever. And, and I was like, no, we're here. This is the low. We should be, I mean, it can go lower. I don't try to be, when I do my analysis, guys, I don't try to be, even if I'm really feeling like, listen, it's probably the low or whatever, I don't try to do something to convince you that it is. I don't try to get you emotionally convinced. So I'm always sure to say, listen, anything can happen. And if it does this other thing, then here's the other targets to the other way. But I think it is. And I think it is. And here's the targets we're looking for. And here's how I'm looking for it to work. And so if you ever wonder why I don't just go in like all the influencers online, that's why. I don't want you jumping into a trade emotionally because the odds are you probably don't have risk management. You probably don't, and you're not using it anyway. So you don't know how to properly, or you're not paying attention to how to properly enter the trade, right? But I'm gonna let you know if the chart's looking like it's looking, I'm gonna tell you. Okay, but I'll always give you targets. I always give targets to the other way. So again, anybody that's in, TWC with us, we update charts multiple times a day, multiple charts. And, I say, listen, here's what I think is going to happen. Here's what we need. If it goes through here, like I'm doing here, it goes through here, that's going to add confidence to it. And we're going to look at that. But if it breaks down, goes the other way, then here's your other targets. And that way you always kind of know where you stand, right? It's think of it as like a roadmap. And you understand the possibilities based on what price does. And that way you don't have to get emotionally involved. You just have to watch for it to do what it thinks it's going to do. And even then it's not guaranteed, but hey, at least you've got a greater likelihood than the emotion that, as traders we generally use, right? Onyx says, had a great trade on oil today. Did you cover oil already? No, I did not cover oil yet. I'm going to pull that up as a matter of fact. Oil. Oh, why am I doing all that? See y'all. There we go. Put on all the numbers. Maybe so finicky, right? Okay. So, as we look at this, we go, okay, we're looking at this as wave one here, wave two potentially in progress, right? So the first thought is, okay, potentially A, B, C up, and we're done with B, right? But we came down, and now we've broken out above here. So now my analysis that I gave our members is, looking for the initial target here and potentially this R1 pivot area up here around the daily pivot as that wave B target, right? So it's always possibilities, right? That way you're not just left thinking, oh God, it only has to do this, right? We're being realistic about what could be going on, especially if we're not getting strong follow through one way or the other, right? So our first target is this kind of 50% area around 87.90. Second target is this R1 to the daily pivot area around 89.5, 89.6. All right. And so basically looking at this as an A, a B, and a C. And then we'll look for a move down, okay? Now, our move downs, our first target is 79.67, so 50%. But I think we're more likely to hit the 61.8 down here around 76.43. And maybe even the 70.5 down here at 74.12. So that's kind of how we're going to play this on the way down, as long as we can get a rejection in here. Now, if we continue to rally up impulsively through this, then there's the possibility that maybe we're not done yet. Maybe we've got to rally up to around 100, 103. So if we're breaking out above the swing high, that's our target. So breaking out above 95 and some change there, 95.0, what is that? 3? Then we're looking around $103 on the rally, and then we'll look for a rejection and a wave 2. So we've always got this ongoing, we've always got that ongoing kind of setups, guys. We've always got this ongoing thought process, and that's what you should be doing as a trader. If you get into a trade and you go, this is it, well, shoot, what happens if it doesn't do it? Or what happens if it does more? You always should understand structurally what may be happening, so you understand where those alternate targets could be, where those additional targets could be, or where, it might be in the other direction if it doesn't even do that, right? Right? So Vincent says, I think oil is on wave 4 on the weekly. Let me see here, wave 4. Let's kind of zoom. Let's do this. You think this is wave 4 here? We got a wave 5 up. Yeah. So again, if it is, that would give you that based on the height here of what would be wave 4. Then that would give you that 103 target. And it's not a bad target. I mean, if you look here, it gets you right into previous area support and resistance. But for right now, that weekly pivot is holding as resistance. It was a doji. We had expanded volume on the first doji. It dojied up above it on similar volume and then follow through here. So yeah, like I said, if it breaks out 103, but until that happens, I'm still watching the idea that we've got this count in here as it sits there. Yeah. So again, if we're breaking out above, basically if we're breaking out above $90.27, I'm going to start really considering seriously the 103 target. Yeah. So we'll see what happens, guys. But, being a trader is about having plans, about understanding what may be happening there, and, being able to, take advantage of the situation as it is, rather than just, just kind of like one and done, and that's it, right? See, this is the thing, guys. So most of the people that you're following out there, when they're talking about trade, they're always talking about the single trade, right? This one trade, this is where it is. The difference you get with us, we talk about that, right? Again, we do have our price action sessions on Wednesdays, which are usually much more directed to single trades or, a series of single trades, right? But most of what we do is to help you learn how to read markets and to understand them. And so that's to understand, to be able to forecast, right? Because you're going to make a lot more money on those longer swing trades and investments than you will on what do you call it? Day trading. Okay. It's not that you can't make money day trading. And a few people have made a lot of money, or like actual wealth, right? Most people aren't successful at trading to begin with, even less so at day trading. And those that are successful at day trading usually are doing it for income, right? If you look like Dick Diamond before he passed away and the way he traded, I've been fortunate enough to go through his training, and he traded the 2 and 3 minute time frames, and it was income trading. He was, it was a job. He was income, right? But and there's nothing wrong with that. But most of y'all come in here looking for that greater wealth, right? You're looking to create generational wealth, stuff like that. And you're not going to get it day trading. You have to learn how to forecast market movement. Guys, you have to be that person that says accumulation's beginning here, terminal shakeout here, and we're heading up. You've got to be that person. You've got to be the person up here in April that says, this doesn't have to be the top, but it's a top, and and give at least a target right in this area, right? Which is what I did, right? You have to be able to do that consistently. That's how you're going to make your money. That's how you're going to create that wealth, right? Because the shorter the time frame, the more trades you take, right, rapidly, the more trades you're going to get wrong, which means the more money you have to make up just to get back to break even, instead of, actually making money. So I think, as a trader, guys, it's important, as traders, investors, it's important for you to figure out who are you as a trader, investor, and be realistic about your goals. Listen to what I'm telling you here about, about what you have to be honest with yourself. I'm not telling you to, to learn to become a market forecaster. I'm not telling you that you can't day trade, but you need to understand what are the realities of doing them. You have to be honest with yourself about it. And many people don't know what the realities are, what I'm talking about here. And so they think they want to until they learn, well, shoot, maybe not. I think that's what I want to do, but it's not in line with my actual goals. Have you guys ever done that in life? Have you said, man, these are my big goals, right? And you're like, oh, but I want to do these other things. And then you start doing them, and then you stop and you go, wait a minute. These little things I'm doing, these other things I'm doing are not in line with my larger goal. You absolutely have to do the same thing as a trader. But see, these are things I talk about that people don't want to hear because they're things that take work. They're things that take effort. Most people come into trading, they just want to be promised that they can make, they can turn $100 into $1 million overnight and not have to worry about risk management, all that boring stuff. But that's why 90+% of traders are out their first 90 days, guys. If you keep doing what the people who are losing are doing, you're going to keep getting those same results, right? Whatever you're doing in life, whatever you're pursuing in life, follow the winners. Follow the ones that have been around doing it for a long time, because they're the ones that can say, hey, listen, these are the pitfalls you're going to come across. Now, are you going to listen to it? Most of the time, you're not. But at least it's there for those of you that do and for the times that you do. They'll say, listen, these are the pitfalls you're going to come across. These are challenges you're going to do. This is how you need to get your mindset. This is the proper way to look at what you're doing versus the way you were looking at it. Right? So again, as always, whether you're joining us or whether you're joining somebody else, these things I'm telling you are universal. These are the things, if you want to be able to go out there and properly consume trading education, most people don't know how to do it. Most people do not properly consume it. And that's why they're like, oh, it doesn't work. Oh, it's a scam. Oh, no, it's you didn't do what you needed to do. But what you'll notice when people say that, they're that same way in life. Everything's a scam. They're a victim. Everybody's doing everything to them. Why does it always happen to them? It's a mindset problem, not a system problem. Okay? And that's dead honest. And people, I know I always do. I get dumb, emails and DMs from people going, oh, you're just saying it because you're trying to sell something. Well, no. Yes, I'm trying to sell something, but no, that's the truth regardless. That's the reality. And only those who actually understand that and accept that and work on that are able to get anywhere, right? You can't buy education of any kind, guys, and expect to get anywhere with it if your mindset is not correct. The problem is most of us don't understand what that means. What do you mean, Chris, when you say my mindset? What do you mean when you say it has to be correct? What are you talking about? Yeah, that's the thing, right? The emotional and the psychological things you deal with every day, that is the biggest challenge you have to learn anything in your life that you have to get better at anything in your life. That's That's what it is. In trading, it's not Wall Street. It's not crypto whales. They're not your enemies. They're not the ones that are going to take money from you. You're going to give away money because, one, your mindset is not correct. Two, you didn't learn how to do it correctly. Three, even if you learned how to do it correctly, you did not have the dedication, the focus, and the discipline to practice it correctly for any length of real time that you needed to. This is life, guys. But man, oh man, if you understand what I'm saying now, if what I'm saying now, you go, holy crap, yes, exactly. If you understand that, then you've got a chance. You've got a chance. But if you don't, and if you argue about that and you argue against it, I'm not going to sit here and try and convince you, but you do need to understand that the reality is you're not going to get where you want to go. Not in trading, not in life. Okay? Vince, what's up, man? Thoughts on harmonic patterns from Scott Carney. Harmonics, yes. Harmonics are basically fibs, okay? And fibs are based on human emotion, okay? I mean, that's the reality of it. So harmonics work, but it's nothing that you're going to pick up. It's like anything else. It's nothing you're going to pick up in a day. You're not going to pick it up overnight, right? You have to learn the rules of the harmonics depending on the shark pattern and whatever else you're looking at. But then, not only you have to learn that correctly, then you have to apply it correctly, practice it correctly for a length of time, right? Not just like a week or a month. I'm talking about months, guys. You should expect to put in 6 to 12 months, 6 to 8 months minimum on whatever you're learning, whether it's Elliott wave, whether it's Wyckoff, whether it's harmonic patterns, whatever. Minimally, and this is focused, disciplined, consistent effort, right? And practicing it correctly over that length of time before you decide it is or it isn't working for you. Because it's not only the thing that you have to learn, you have to learn it correctly, but then it's applying it to whatever market you're applying it to. The more time you've spent in the market, the more you get used to the way the price and, ebbs and flows and the way the markets kind of move, right? Remember, markets are organic, guys, right? We talk about high frequency trading and all that, blah, 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 but it's really what's going on in the bigger picture. High frequency trading is all about the shorter term, guys, but the larger trends are what you're interested in, or what you should be, because those are the ones that create generational wealth. And those are dictated by, human emotion or reactions to it, right? In the aggregate, the bigger picture. So yeah, harmonics, yeah, Fibbo's agreeing here, says harmonics are awesome, but take some work. They do. But remember, harmonics are based on fibs, and fibs are, this way that we understand human emotion, right, in the markets. So yeah, you can do it, but I just want to caution, because so many people that I talk to, they expect to learn it overnight and get it right away and whatnot. It's like everything else. And if it doesn't, they half-ass their way through learning it. And if they're not consistently profitable with it in 2 days, oh, it doesn't work, it's a scam, right? I don't have time for that nonsense, right? Seriously, guys, do you have time for that nonsense? No, you're here. You want to learn seriously how to trade. That's fine. You should. It can provide an amazing life, but not unless you take it seriously and you do the things you have to do and you look at it properly. If you do anything else in those things, guys, you're just not going to make it as a trader. That's the hard truth. I say things like that and I wait to see, okay, do we actually have people that really want to learn to trade now? Learning to trade is not how long you continue to buy new things and whatever. I mean, as a trader, you should be constantly learning, okay? But that alone, just buying courses and running through them real quick isn't going to get you there. It takes all that other hard work that nobody wants to do. The consistent effort, the discipline, the focus. That's what does it. The mindset. Being humble, understanding that if you're coming into trading, you likely have no clue how it really works and how markets really work. And I tell that to people a lot of time, new traders, and they get so offended. Why are you going to get offended? Do you want to be right or do you want to learn? Do you want to be profitable? My God, guys, people are so egotistical these days. They don't want to listen. You got people like myself, Peter Brandt, Bollinger, we're all out here. We've been doing this 30, 40, whatever years. And we're trying to tell you, listen, this is what it takes. These are the things you have to pay attention to. And all of us talk about mindset and risk management at the top of everything we talk about. But most new traders, 8, 9 out of 10, no, you know what you're talking about. And you talk a bunch of shit online and you're just a jerk. You just didn't get it. And because you don't get it, because you refuse to get it, you're never going to get it until you change that, right? You can say you want to be a trader all day long. You want to be profitable. You got these big goals, but are you doing the things you have to do to get there? And if your mindset is not, as I'm talking about how it needs to be, guess what? You're not going to get there. It's a requisite. It is required. You can't do it without the proper mindset, without the proper understanding, because that's where you start. That's your base. That determines how you perceive everything else. That determines how you consume that trading education or the coaching or the mentoring. You absolutely have to have the right mindset. Otherwise, you're just wasting your money. I hope that makes, okay? Fibbo's saying he's not committing, but maybe he'll do a harmonics class sometime. So maybe, right? But anyway, guys, okay. So yeah, so this is kind of what we're looking for here. Man, I've gone through quite a few charts here. I've got to get out of here. So I think I'll probably do it, okay? But, again, most important things, guys, mindset, you have to understand. You have to be humble. You have to recognize that you probably don't know what you think you know. I don't care if you've been trading for 3 years. Are you consistently profitable? If not, then you have to be honest with yourself and go, dang it, I don't know what I'm trying to tell myself and everybody else that I know. And that's okay, because now you have admitted that. Now you know that. And guess what that means? Now that you've said that and you know that, now you can fix it. Until you do that, unless you just sit there continuing to argue about it or whatever, you can't fix it. And if you can't fix it, you're going to keep doing the same thing over and over again. And if what you've had is inconsistency and lack of profits and lots of losses, that's what you're going to continue to get. Does that make sense? I hope to God you guys are listening. This is the stuff you should be here for. Yeah, I do charts. Yeah, I talk about macro stuff. But what I'm talking about right here, the last few minutes, this is the stuff that's going to make or break you as a trader. This is the stuff that's going to make the real difference into whether you can become successful or not. You can become successful, but are you going to do it? Most people choose not to because they want to be right rather than profitable. They don't want to be, they want to be egotistical instead of humble. And trading, just like anything else you do in life, you've got to give in and stop being your own worst enemy. Stop stopping yourself from being as great as you can be in whatever it is that you're doing. Okay? I hope you guys have an amazing weekend. If you're superstitious today, do what you need to do. Stay safe, all right? As always, remember the only thing you control in the market is how much you lose. So absolutely, most important thing you're going to do day in and day out as a trader is proper risk management, okay? Other than that, again, guys, I hope that you just listen a little bit. I'm not here to say I'm better than you or anything else. I'm here to say, listen, I was where you were at one time. And these are the things that I found out that I had to do to get to where I am today. That's all it is, guys, okay? You guys having a great, amazing weekend. Trade safe. If you're in the mentor program, guys, don't forget we'll be there in about an hour. We'll have our weekly session. But everybody else, just be safe out there. Take some time away from the charts when you can. And man, oh man, I'll drop that link to the BitLab interview I did as soon as he gives it to me. I'll drop it across social medias, and then if you're with us at Texas West Capital, I'll drop it in there as well. All right. Gold Fibbo saying gold is $1 from his target. Heck yeah. All right, guys. Y'all take care. And man, I guess I'll see you next week. All right. Take care, everybody.